The EURUSD currency pair fluctuated throughout Tuesday. In the first half of the day, another decline was observed, potentially driven by weaker than expected DW economic sentiment indices from both Germany and the EU. In the second half of the day, the pair experienced a slight recovery, likely in response to remarks from Federal Reserve Chair Jerome Powell. It remains unclear what exactly Powell communicated to the markets, but in any case, the Fed is expected to maintain a generally dovish stance over the next 1 to 2 years. The only question is the pace at which the key interest rate will be lowered. Even the modest upward movement observed late Tuesday has not significantly changed the technical picture. From a technical standpoint, the price has now broken through a second consecutive descending trend line, suggesting the start of a potential new uptrend. As a reminder, there are no strong medium-term reasons for the dollar to strengthen, and its recent gains seem questionable considering the fundamental and macroeconomic backdrop. The pair managed to breach the critical line yesterday, increasing the probability of continued upward movement. On the 5-minute chart, no valid trading signals were formed during Tuesday's session. Only in the evening did the price reach the 1.1604-1.1615 zone and the Kijun-sen line, but it failed to consolidate above or rebound from these levels. As such, trade setups are likely to shift to Wednesday, though signals may also form overnight. COT report. The latest commitments of traders. COT report is dated September 23. As shown in the chart, the net position of non-commercial traders has mainly remained bullish. Bears barely gained the upper hand at the end of 2024 but quickly lost it. Since Donald Trump's return to the presidency, only the dollar has declined in value. While we cannot say with certainty that the US currency will continue to fall, global developments suggest that this scenario may prevail. There are still a few fundamental drivers supporting the euro, but many factors could still weaken the dollar. The global downtrend is still intact, though its relevance after 17 years of history is debatable. The dollar might resume strengthening once Trump ends all trade wars, but recent developments suggest the conflict will persist in some form. A potential loss of Fed independence is another powerful bearish factor for the US currency. The positioning of the red and blue lines continues to indicate that the bullish trend persists. During the most recent reporting week, the number of long positions held by the non-commercial group decreased by 800, while short positions rose by 2,600. Thus, the net position shrank by 3,400 contracts. EURUSD 1-hour chart analysis on the hourly time frame. The EURUSD pair may have completed its recent downtrend last week. The trend line has been broken, so now the euro needs to consolidate above both the Kijun-sen line and the 1.1604-1.1615 resistance zone. If this happens, we may expect an upward move toward the Senkou-span-B line. From a technical standpoint, the euro is overdue for a climb. For October 15, the following levels are relevant for trading: 1.1234, 1.1274, 1.1362, 1.1426, 1.1534, 1.1604, 1.1615, 1.1657, 1.1666, 1.1750, 1.1760, 1.1846, 1.1857, 1.1922, 1.1971, 1.1988. Also note the Ichimoku indicator lines, Senkou-span-B 1.1687 and Kijun-sen 1.1595. These lines are dynamic and may shift during the day, which should be considered when identifying trade signals. Don't forget to move the stop loss to break even if the trade moves 15 pips in your favor. This helps minimize losses in the event of a false signal. On Wednesday, the Eurozone will publish its industrial production report. While not insignificant, it is not considered a high-impact release. No major macroeconomic events are scheduled in the US, which is unsurprising given the ongoing government shutdown. Trading recommendations. On Wednesday, traders can once again trade based on the 1.1604-1.1615 level area. A confirmed breakout above the Kijun-sen line and this resistance zone would validate long position with a target at 1.1657, 1.1666. If this does not occur, the pair is likely to resume its decline toward 1.1534. Chart legend, support and resistance levels, thick red lines, potential reversal zones, but not standalone trade signals. Kijun-sen and Senkou-span-B lanes transpose Ichimoku indicator lanes from the 4-hour chart to the hourly chart, considered strong technical levels. Swing highs, lows, thin red lines, previous reaction levels that may serve as trade signals. Yellow lines, trend lines, channels, and other technical patterns. CLOT chart indicator 1 represents net positions across trader categories. The material has been provided by Robot FX Robots.